One, two, three, we're live.
All right. Thank you, everyone, for joining our live webinar today on our equity fund for our current multi-family investment opportunity. I'm Scott Powers. I'm an investment advisor for RA and Associates Equity Partners, LLC. We've had an overwhelming interest in this equity fund and this investment opportunity. It's a 12-unit multifamily acquisition and development in Los Angeles, California. It's near the future home of the Los Angeles Rams football stadium that's currently under construction. So as you can tell, there's a lot of excitement in the Los Angeles area for this to happen. We're really glad to welcome you to this live webinar and discuss this opportunity and answer questions for you. Just a quick note on this project, commitments are going to be on a first-come, first-served basis only. We're going to dive into this 12-unit acquisition and development opportunity, the structure of the project equity fund, and how investing in this structure is lucrative to you due to the equity partners' profit-sharing participation in the deal, as opposed to other fund opportunities where there is no profit sharing. I'm going to introduce you to our two principals. They are Robert Andrade and Chris Ifini, and they'll be able to address any and all questions that you might have. Really quick about RA and Associates Equity Partners, LLC. They're an equity firm designed to provide investors with a passive, limited partnership in the core of our specific investment opportunities with high yield returns for investors and a 25% kicker opportunity on the profit sharing. The fund itself focuses on investing primarily in project-specific, value-add, multifamily properties of various sizes in the metro Los Angeles area. In addition, the fund identifies and targets investment-ready opportunities in value-add and income-producing real estate. This fund is going to leverage our in-house property management and construction maintenance divisions to maximize the value and cash flow of the projects we undertake. So this project-specific fund is focused on generating double-digit returns for our investors and our equity partners. So we want to jump in here and talk about this Mesa Park multifamily acquisition and development deal. And to get into more specific details, I'm going to introduce here Chris Ifini, one of our partners. And Chris, what can you tell us about this investment?
Basically, Scott, we've been working on this project over 2 months and are very excited to be wrapping up negotiations. The purchase price is about $1.1 million, and we've already secured construction financing, debt financing for up to 70% of the total project cost, which is estimated at $3.75 million. The value of the project upon completion is about $5 million at a 5% cap rate, and also valued at $5.2 million on a 4.8 cap rate. So about the Mesa Park Apartments 12, it's a shovel-ready 12-unit apartment building in Los Angeles. We're offering a 12% ROI for people who invest now. The project overview basically consists of acquiring the site, developing and building the apartment building. It consists of 9 3-bedrooms, 2 bathrooms, 2 2-bedroom and 1 bath, 2 bathrooms, and 1 1-bedroom and 1 bath. So the total living square footage is about 12,860 with an open floor plan. It has 16 parking spaces, and the return summary is basically 12%. The profit share is 25%, like you mentioned earlier, and the valuation is $5 million at 5% cap rate. The whole period is 15 months. And the exit strategy we have, because we know investors want to know how soon they can get their money out, is to sell the finished apartment building within 3 months of completion, or rent and refinance the building to pay off an investors and their return on investment. Next page. The site features basically the property is currently vacant land, multifamily zone, correct zoning. The 12 units that we're building on it is pretty much the maximum we can build on the site. The entitlements are all complete. The permits are ready to be issued. The location, this property is located in an area called the Park Mesa Heights community near Windsor Hills in Los Angeles area. This particular area is a few blocks, like you said earlier, next to the future home of the LA Rams football stadium that is currently under construction. It's strategically located in between four major freeways here in Los Angeles: the 10 freeway, the 110 freeway, the 405 freeway, and the 105 freeway. And it is also minutes from Hollywood, the Mid-Wilshire, and the bustling and thriving downtown Los Angeles area. The market demand in this area is highly sought after for working class families and millennials in the LA area. And also the affordable apartment units in this neighborhood is extremely in high demand as well. And sell or renting these completed apartment units would be very easy undertaking because the city of Los Angeles currently has a huge deficit in apartment housing financing. Market overview and rental rate. The future valuation, like I already mentioned, is at $5 million at a 5% cap rate, and the rental analysis shows us an average of $2.30 per square foot. So the next slide will show you the architectural design. Overall, as you can see, it's a modern-looking, clean building. You can see the top left corner there of the screen. The parking layout on the top right corner of the screen is pretty much, this is an underground, ground level parking. So it's very accessible and also makes the construction of the apartment complex very easy. On the bottom left is the vacant land. You can see the site, which is ready. It's been pretty much brushed off, cleaned, and clear of all debris, ready to build. On the bottom right is the surrounding area, the neighborhood. You can see a few apartment buildings here and also a mix of residential areas that are zoned multifamily. And so the next slide will basically shows the construction company that we're going to be using, and the project developer, manager, and sponsor will be Iron Associates, and the investment real estate sales will be done by Team Marcus and Millington. So that's pretty much an overview, Scott, about the project.
Chris, I had a quick question for you here, because I think it's really important that you mentioned this project is shovel ready. So it's my understanding that all the permits for the building itself have been approved already. I know that's something you guys are really excited about. Just can you talk about that for a quick second?
Oh yes. I mean, it took. I personally we've been working on this project for almost 2 months now, and I've been in contact with the processor, the developer who actually runs the project. It took him about 8 to 9 months to get all those permits approval and process and to get it done. I mean, the city of LA is very meticulous in approving projects. So, I mean, this is a great undertaking for us because we don't have to go through the 9 months that he went through to get this approved. So, basically, upon closing our escrow, we'll pay for the permits and we break ground the next day. So that's what it means by already approved, ready to go.
Okay, great. So I'm going to take a role here as an investor, and I think what everyone would want to know is how can I be guaranteed that my money's secure when I put it into this project?
Well, we offer a limited partnership position. So basically, you're going to be part owner of the project, and you have a preferred equity position, and you have what we call units when you buy into this development. So we, the sponsors, are going to be the common unit holder, and you, the investor per se, will be the preferred equity holder. And so you actually have more priority than we do. So that's how your money is secured against the property, because you are an equity preferred equity holder to the property. So there's no better security than that, as opposed to the stock market, which you can't really identify to anything apart from the open air stock. In this case, you have real estate as part owner.
Right. So they always have that right to the physical real estate then.
Exactly.
Okay. And then, Chris, if you could describe the term of the project and the exit strategy here, and essentially when, as an investor, would I be able to expect to get not only my money back, but obviously the return on that as well?
Absolutely. Great question. I mean, we put the whole period of 15 months on this property, on this project, but we anticipate to be in and out in 12 months because we work with a highly skilled team of subcontractors and contractors that we've been dealing with for years, who deliver the project on time and within budget. And basically, these people and their companies, they are licensed, insured, and bonded, and professionals in the trade. So that's why we are confident that we will be able to deliver the project within the time frame that we've speculated. And actually, we would like to say that we can deliver it before the time frame that we've speculated. So that's actually because we have a team of experienced and licensed and bonded contractors and subcontractors that we work with on a regular basis to deliver our projects without fail.
I see. So it's not like you had to go out and get bids from different construction companies. You already have a team in place.
Absolutely. We have an experienced team that we've been working with for years, and we trust and based on experience, based on project delivery, on time and on schedule. So that's why we are confident in our ability to be able to produce the project in the time frame that we're allotting to it.
Okay, great. And I'm just going to go over here, just to be clear, Chris, for my records here, we're looking to build up, have an equity position, a capital raise of $1.25 million. It sounds like, to be invested in this project, and then the minimum investment is going to be $25,000. So that'd be the minimum. Shares are $5,000 each, so you'd have to buy 5 shares. The $25,000, and after that, it can be in $5,000 increments. Is that correct?
Exactly. So that's 5 share units.
Okay.
For each. So the minimum is 5 of them. So that totals to $25,000.
Okay.
We always have the discretion to, depending on what an investor wants to invest, and how many people have invested, we can adjust what share amount we can allot to them depending on our availability.
Okay. And then, so the expectation here is a 12% cash-on-cash return based upon a 15-month holding period, and then a 25% profit share with investors in the net proceeds. So we're going to take all the proceeds, 25% of that's going to be reserved just for investors. And then I know this is we're hoping this will fill it fast. We know it will. We have a lot of interest in it, and commitments are coming in on a first-come, first-served basis. So if you're sort of late to the game, then it might be another project we can get you in on. But right now, we're going to fill this up because of the permits that are ready to go, and this is shovel-ready. We're going to fill this up very quickly. And for investors, we want you to let us know if you're interested, and you can do that by clicking on the link. And then we will get in contact with you to discuss, review any questions. We're expecting to take all investment commitment opportunities here in the next week. They'll be looking for commitments by the 15th and to be filled up by October 18th. So again, we're going to provide you with additional deal documents upon your reservation confirmation, and which will be the subscription agreement, the private placement memorandum, the financial analysis, and the overview of the property. And I know everyone's really excited about this. Again, a 12% return on the 15-month hold, plus a 25% profit sharing, which is really unique to in our industry here. And Chris, I really want to thank you for your time. I'm looking forward to hearing from our investors out there on our webinar. And I think that we've covered everything here.
Very much. Yeah, thank you, Scott. Well presented. We look forward to our investors and creating value, for them and making them wealthy.
All right, sounds great. And for everyone, we're looking forward to hearing from you on this investment opportunity. Thank you very much.